Today is June 18th edition of Back Roads of Illinois. We were Central Illinois agriculture source, and in the Midwest alongside in Central Illinois agriculture, we're glad you're here. Today we were going to have our guest from Tractor Zoom on my show about the tractor trend and the agricultural machinery for right now with Andy Campbell from Tractor Zoom. We were excited about the conversation with Andy, and we were talking about the commodities markets with Ted S. from Zaner Hedges. All right. This week is having a heat wave in the Midwest and central U.S. with the storms and the heat. It will be very humid for this week in central Illinois near 90s and the heat index within 100 degrees. Be careful with these temperatures this week in the House because they are getting their respective of the Farm Bill for this week in Washington, D.C. The lawmakers wouldn't be agree with the SNAP program and food trash Title 1 program for this week in Washington, D.C. This is your agricultural news on Back Roads of Illinois. Corn futures finished in down 7 to 8 cents from yesterday afternoon because the demand is lower from the demand with other countries. After that, the close. The markets did ignore the weather premium for this week with the heat. China has banned meat from the West Coast port after the meat ban from the meatland in Colorado. China has been canceled with the European Union for trade with China. BLM director has been grilled by Senate Republicans. Republicans rejected the federal lands in the West by this administration. In Idaho and Wyoming has put a lawsuit against this administration over the federal lands on grazing with cattle. This is your commodity markets update minute on Back Roads of Illinois. Corn futures finished in up 8 to 10 cents. Soybean futures finished in up 7 to 4 cents. Wheat futures finished in down 3 to 4 cents. Now that we were going to talk about the livestock market for today on this morning, cattle finished in down 3 to 4 cents per weight. Feeder cattle finished in down 8 to 4 cents. Lean hogs finished in down 3 to 4 cents. Remember that the market is closed for tomorrow. We were coming back with Andy Campbell from Tractor Zoom. Campbell from Tractor Zoom in Central Illinois, welcome to the show. How are you today?
Cesar, I'm doing well. It's a little warm outside, but beyond that, I can't complain. The summer's growing season is off to a good start.
Let's start with our conversation about your company and the tractor trend and the agricultural machinery for the farmers.
Yes. So, yes, starting with Tractor Zoom. Tractor Zoom was founded in 2017. So now it's almost a 7-year-old company, and all with the idea of trying to help farmers find the machinery that they're after faster, easier, and help them make decisions better. And we've grown from there, and we offer a common listing place for almost 2,000 auctions and 2,000 auctioneers, and close to, I want to say, 16 to 1,700 dealership locations all across the United States. So that's tractorzoom.com. And then we offer all that for free. We're just trying to help them find the equipment they want at the best possible user interface in the easiest way possible. And then we also work with dealers, farm credits, insurers to help them value equipment. And right now the machinery market in for the past 3 to 4 years has been in flux. It's been a roller coaster. And so, with those values fluctuating so much, we provide real time access to information that allows them to put the accurate value on the piece of machinery that they're either insuring or using as collateral or selling or trading in.
How about the auctioneers?
Mm-hmm. Yes. So, from an auctioneer standpoint, and like I said, we work with about 2,000 across the country. This is just an opportunity for them to broaden their market share. And so we work with auctioneers. We post about their market or about their upcoming auctions, and it's no cost to them. And if they want to, we can socially boost their posts through our social media channels. And we actually work with a lot of auctioneers too, who will use our data to then go to farmers and say, here's what I think you might be able to bring at auction, just because we have the most recent and broad database out there with these auction values that's really easy to access. So we're able to help those auctioneers make decisions with their farming partners to say, here's what we'd expect you'd bring at auction. And that's a lot of what I track are the most recent auction trends that are out there.
The commodity markets is lower than previously years since March. I bet that the markets are trading down for the equipment.
Yes, great observation, and that's probably one of the simplest ways that you can kind of track the equipment market is you have to follow the money. And if the farmers don't have the money, then the equipment might be worth a little bit less. But it actually ends up being a lot more nuanced than just that. At a very high level, commodity markets down or commodity markets up will shift the equipment market. But then you also have the supply aspect too, and the fact that supply isn't even all across the United States. And so, for instance, 8R John Deere tractors right now in Illinois, where you're sitting, in Iowa, and especially up in the Dakotas, too many of them. And so, what it does is it's depressing that market right now. And so, some farmers are able to get some of those a little cheaper than what they have in the last couple of years. But that doesn't mean that it's always that case out east. And so, we're seeing some 8R tractors, some other types of equipment out east go for okay money. And so geography matters a little bit too. And the types of crops that are grown will make a difference. So I just did a big analysis on utility tractors, which in your commodity growing states, those values are down, but it's buoyed a little bit by the stronger cattle market that's out there. And so that makes things shift and move a little differently. And so it doesn't just all rise and fall with the price of corn, even though that does have a very big influence.
Inflation is affected for the tractor trend for right now. Could you explain to our listeners about this?
I'm glad you brought that up because I don't know if anybody likes paying 7 or 8% interest on anything. And so I think a lot of people see the higher level of interest and then the recent inflation is bad. And so the recent inflation, let's put that aside for a second because the farm equipment market has seen a lot of inflation over the past couple of years, driven largely by a lower supply that's out there. But on the other hand, we also have a high interest rate that's going on. And again, most people have this negative connotation to that, and it's hard paying that extra money. But with that higher interest rate, everybody feels that. The manufacturer feels that. The dealership feels that, as well as the farmer, whoever is having to finance. But from the past couple of years, a lot of farmers are in a much better cash position than what they have been, especially in the late teens, up to 19 and 20. And so they might have the ability to pay more for cash on cash right now than they had back then. So they might not have to finance as much. Plus, the interest rate does apply a lot of pressure to the dealerships too. And so the dealerships are working on ways to be lean with their inventory. And right now, what we're seeing are a lot of liquidation auctions to where the dealership doesn't make sense for them to carry a large amount of inventory because it's just too burdensome. And so this summer, in the summer of 2024, what we're seeing are a lot of liquidation auctions so dealerships can reduce their inventory levels to a healthier level. And what that means for a farmer is you might get a good buy at auction, or what I'd actually suggest to a lot of farmers too is if you're thinking about buying a piece of equipment, you could wait for auction and roll the dice and see if you can get it. Or you can also just be proactive and approach your dealership too and say, hey, here's what I have to spend. what do you have available, or look at their listings on tractorzoom.com, see what they have available there, and then work to make a deal, because that could work out beneficial for both parties. Just like that.
I bet. Is there anything would you like to go to be telling our listeners about the used market in today's market?
Whew, there is a lot. And so, where to begin? One of the things that we saw in 2021, 22 were just the combine values. I think a lot of people were just astonished by how fast those combine values, used combine values, were rising. A little bit of it was driven by the manufacturers boosting up their new prices. And so that drags the used price up a little bit. But a lot of what drove it was just the scarcity of everybody saying, like, I don't have a combine, new one didn't come in, I need one. And so they're driving to get whatever they could. And a little bit of that, borderline hysteria just kind of built everybody up and just kind of ramped emotions up. And so that elevated prices quite a bit in 21, 22, and early part of 23. Then once the commodity markets started to show early signs of softening, I think that was a wake up call for a lot of people saying, wait, this good times don't last forever. This might not be profitable going forward, and especially at the cost of those machines. And so that slowly started to tamp down combine values. But really, even at the end of 2023, we're still seeing great values coming in for combines. Most row crop tractors, self-propelled sprayers even lasted early into 2024 with values. And so that shows that it is a supply and demand equation out there, but there's also an emotional component too that we witness. And some of it is residual cash that, like I mentioned earlier, you follow the cash to see where the markets go. And some people just had cash left over from 23 into 24, and they could make the purchases for the select pieces that they wanted. And so early in 24, I was still seeing a couple, not many, but a couple record prices go for certain models, but they are ones with premium seats, coolers in the thing. And it's just the farmers that had the money, that it knew exactly what they wanted, probably two farmers, they went and aggressively went after what they wanted. And so that made the beginning of this year a little interesting. But now we are certainly in 2024, we're coming back down into reality for matching the supply and the demand that's out there. And so the trends that we're seeing right now are, combine values are certainly down. There's going to be a lot more supply that hits the auction market. And this will probably continue for the rest of the summer as dealerships right size their inventory levels and then move some of that equipment onto the farm. And another thing that's interesting, fascinating, and troubling, just depending on what side you sit on, is the export market. So we traditionally, the U.S. exports a lot of used equipment. Once things kind of get down to the South and they get to the end of the useful life in the United States, they have a second life over in Ukraine, down in Brazil, over in China, except not in Ukraine anymore. Brazil, yes, but that's just kind of what it is. China can turn off the spigot, and they have on a lot of pieces of equipment. And so when they do that, that creates a massive backlog here, an overabundance of supply. Don't know what to do with those heavier used pieces of equipment. And then you throw in high interest rates, a higher cost of inflation that we felt through the last couple of years, and low commodity prices. And I won't say it's like a perfect storm because, I don't think we're in a dire situation like we have been in the past, but it makes for a more challenging situation, no doubt. And so I think it's just a time for equipment dealers and farmers to get a little bit closer together and work collaboratively on what they can do to outfit their operation at a financially sustainable process. So there's certainly deals out there if people want to buy them at auction or at dealerships for sure. But not quite sure on how long this one is going to last. Is they have needed a lot to try to mechanize the countryside, but China also wants to make it themselves. They don't want to have to rely on external entities, and not every external entity wants to play in China. And so they're trying to make some of their own. Some of it's not the best quality. And so it's just created a very fluctuating export market for farm equipment. We'll see how it goes of mechanizing China, but I think it's going to be a big variable in the next 5 years to figure out how well they can do it and how they're going to feed their changing population. And if they are going to need assistance from us, export assistance in terms of grain, but also in terms of machinery. I don't know how it's all going to shake out, but I know it's going to be different than it looks today.
I didn't know about that until right now. Do you have any final thoughts about these tractor trend and used markets in today's market?
Yeah, I'd say my biggest final thought is there's so much data being captured now. I know it's a cliche and it's out there, but it's true that the data is out there. It's just how well can you use that data to help you make the type of decisions, and that's what Tractor Zoom was really founded around, trying to help people make decisions off the data as fast as possible and as easy as possible. And so, whether it's your farming operation or whether you're an equipment dealer, that what used to take us, days or weeks to kind of collect and cipher through and make decisions, a lot of that can actually be made in a very finite, short period of time now. And as there's less and less of a population here in the Midwest. We see it with our farm. Sometimes moving faster is more important. Especially if you can get to the same kind of decision or even a better decision in that short period of time, and then you can utilize your time for generating revenue, living a better life, doing something else on the farm. And so that would be one thing that I'm definitely seeing change in the Midwest right now in the equipment market, but even in farming in general, is the availability of data. Still has to make sense for your operation. So just like upgrading a tractor does, it has to, make sense on the income statement. It has to make sense on the balance sheet. But if it does, time is a very precious resource as well. And so if it can save you time and make better decisions, I think it's certainly worth exploring for operations.
Thanks, Andy.
Thank you. I've enjoyed this.
This is Andy Campbell from Tractor Zoom. We were coming back with Ted S. from zaner Hedges. I'm joining with Ted S. from zaner Hedges. Welcome to the show. How are you?
I'm doing well, Cesar. Thanks for having me.
Let's start with our conversation about the grain market for today's open. The markets took a dip until the day after the close from yesterday afternoon.
Yeah, yesterday was a very heavy day after a weekend where there was a little bit more rain than expected in some areas. So starting Sunday night and into the trading session on Monday, we were trading the weather that had just happened, rain was actually continuing through Monday versus what the longer term forecasts. Now, here today, Tuesday, we have turnaround Tuesday. We're taking back a lot of the losses. Corn's taking back most of the losses, where soybeans have taken back about half. And now we're looking at a longer term forecast that is a bit more concerning. We're worried about hot and dry. We're worried about overnight temperatures not getting down to the levels that we want them to. It's just, this is the time of year where we're going to be concerned about weather. We're going to be concerned about, should we be adding weather premium? And the forecast that we have right now, I think, is scary enough that the market may need to be adding some weather premium. So I'm wondering if the low that we had, the sort of spike lows that we had in corn and soybeans in particular, but also possibly wheat, you wonder if these are the near-term lows for now. If that forecast doesn't get cooler, wetter for the east, you would think that there might be a chance for the market to develop a bit more weather premium here over the next couple of weeks.
Yes. I see that for this morning with the corn market for up to 7 to 8 cents.
Yeah, which is about how much it was down yesterday. So, it took it away yesterday. It gave it back today. We need to close up here. That is very important, and we need to follow through the end of the week because the chart that we were left with at the end of the day on Monday was pretty scary, really for all of the grains. So we need to do some work here and continue to follow through to kind of negate that downside breakouts that we saw across the board. But this is a great step in the right direction. But again, beans aren't erasing all of yesterday's losses.
Ted, did we see a rally in the wheat markets from last week about the Russian wheat?
The wheat market's really been on its heels. It's tried a couple times to find some footing, but then, has really broken really any major support here over the past few weeks. We had the strong rally beginning in April. We're now trading back into levels that we were trading in April. So we've given up most of the gains at this point. And so the question is, where do we go from here? I think there are still some concerns about, Russian wheat crop and what that might mean for us and our exports. But in the meantime, we've got a winter wheat harvest that is rolling along. So, we have our traditional winter wheat harvest pressure. And then you have a really very good rated spring wheat crop, 76% good to excellent. So domestically, the wheat story isn't tremendously bullish. You could say that the global situation is fairly friendly. But if that doesn't translate into a big influx of exports for us, well, then wheat is going to kind of trade domestically, even though it is a very, very global market. Without that export business or without a big fluctuation or an increase in export business, it kind of just stays, domestic. And domestically, we're looking for increased carryovers year over year.
Underway.
Yeah, so freezing weather in Russia, and then they've also had dryness. So there's been like double whammies kind of happening for Russia, and that Russian crop might be coming down fairly significantly. However, the USDA has not made that reflection in a monthly WASDE report yet. We will see what happens in the July report. In the meantime, here, yes, we're now 27% harvested on that and on our winter wheat crop. So as that wheat's coming out of the field, it's, as it always does, it puts some pressure on the market as those bushels come to town and those cash sales get made.
Oh boy, it's hot out there that the markets did ignore the weather premium for yesterday. What is your thoughts about it?
Yes, it is very warm, Cesar. It is very warm. Again, yesterday we were kind of trading a bit of a surprise system that was it was in the forecast, but not sort of the amounts that happened in a lot of areas. Basically north and into that slid into east as Monday went on. So you're right. We didn't focus on that on Monday. We didn't focus on the heat on Monday. We focused on those pop-up storms. But then now here today on Tuesday, we are a lot more focused on the heat here for the rest of the week. The fact that, it does cool off next week, but then the longer term forecast has this hot and dry ridge building again, pretty much centered over the east. And there is concern sort of building between the weather forecasters and some analysts. Producers on the east would really not like to see that forecast come to fruition. So, yesterday, I think we were trading a different time frame of weather. Now we're trading the forecast. And so if this forecast stays the same as it is, well, you might see some more upside potential here. This is a really good answer to yesterday's question.
Yes, I listened to the weather models indicate that the heat index within 100.
It's warm. And we actually set some overnight record temps, not by a whole lot, but overnight temps is something that we've become more and more concerned about in recent years. crop needs that cool down in the evening for growth. And the concern is that if we don't have lower overnight temps, that might ultimately have a pretty big impact on the crop. So that's one of the big parts of why we're now wondering if we should be adding more weather premium to the market.
How is the cattle demand for next 2 weeks of the 4th of July weekend? Do you see domestic supply for right now?
Yeah, so the domestic supply situation is fairly tight, and it has been for a while. And this has been something that we've been trading or factoring into the livestock complex or live cattle complex or cattle complex for the better part of 2 years, really. And as you mentioned, we're kind of getting into, or we are into the peak summer grilling season. It really is hot and heavy all the way through the 4th of July and then kind of cools off after that as the temperatures actually heat up. And people, we get into what we call the summer doldrums. So, end of July into August, demand kind of slows down a little bit and then heats back up again as we get into Labor Day. And the question is, is this year going to be any different? And based on what's happening with the stock market, the fact that it is an election year and, while we haven't seen a cut in interest rates, they also haven't raised them for a while. It seems like domestic demand is going to stay pretty solid. The consumer sentiment, while it has waned a little bit, does seem really rather strong. People seem confident about the economy at the moment. I think some of the analysts, including myself, are a little worried of where we might be when we get into the fall, and that might be a concern for beef demand if we do start to see a bigger drop in the S&P or stock indices. But at least for now, and for probably the next couple of months, I think things will hold up well, and I think our domestic demand will. Yeah, there's a lot of talk about what can happen with rates between now and the end of the calendar year. Specifically, what might happen between now and when the election occurs in November. I think the general feeling is that we probably won't see any increase in interest rates, although I do think there are reasons to think that inflation is kind of coming back a little bit. Summertime, that sort of happens. People get a little spend happy. We want to be outside and doing things. We want to have experiences. We want to go to restaurants, things like that. But again, election year, I don't think that we'll see, any big increases in rates. Maybe see a cut is possible, right? And so, I think for the moment that'll be all right. The question is, what happens after the election? I kind of feel like we're not past the inflationary period of time. I think we're sort of in the tertiary stage of inflation, but I could argue for higher interest rates before the end of the calendar year or into the first part of next year.
Do you have any final thoughts on the corn yields as far as the acreage report on June 28th?
Yeah, it's really early to be debating corn yields. Aside from the fact that we'll say a 181 trend line yield seems rather high. We've not really been able to get anywhere near that. I mean, the 177.3 from last year, even though we could argue that the weather wasn't perfect, I'm going to say that it doesn't look like the weather is perfect this year. So I mean, it's a lofty target, but I don't think this is the time frame that we can really argue that. As far as acres are concerned, that's going to be a wild debate between now and the end of the month. A lot of people are going to say, well, because of the very sloppy planting season that we had, that we've probably lost some corn acres, possibly shifted to beans, but then really just, probably found a lot of prevent plant acres. There's going to be other people saying that, there was a reduction of about 6 million acres in the principal acres when we saw the intentions report, and that there were more acres to be planted. so that we could actually see corn acres maybe drift a little higher. So that debate's going to rage until we see the number at the end of the month. That report will be a very big deal. Also, quarterly grain stocks. But that'll really set the tone for the rest of the growing season, that along with weather.
We will see for this pro farmer in Iowa, central Illinois on August.
Yes, it will.
Thanks, Ted. This time is Cesar corner of the markets. Okay, this corn crop is very simple, good for this heat wave in the Midwest. You guys are saying that Cesar, the corn market, is down for right now alongside with the beans. However, there is a demand for export to other countries like in Mexico, Colombia, Japan. Don't panic about the commodity markets. This is Cesar Corner on back roads of Illinois. Thanks to Andy Campbell from Tractor Zoom and Ted S. from Zaner Hedges. Well, folks, there are our show on back roads of Illinois. You can listen to our show on YouTube and whenever you get your podcast. For Back Roads of Illinois, I am Cesar Delgado. Have a good day.